Happy Halloween, October 31st, 2022. Retirement income options with some stock talk. Let's dive right into it. This week's retirement income options, we're going to look back at the last couple of weeks' retirement income options, talk about those trades, and then talk about what I'm seeing right now, as well as an idea that's on the edge. It's a very short list idea name that I think we're going to get into at some point, probably on the next pullback. However, what really makes it special probably doesn't hit their bottom line for 5 years. So we have time, but we have to look for that spot because it's an idea that was covered at the Consumer Electronics Show in 2020 that I went to. And here we are 2 years later into the development of that idea and where it's going. And I think that's really going to do very well over time. And it comes out of that whole thought process of when we invest, are we thinking about 2 years out or 10 years out? And a lot of times when we're thinking something is really far away, it's really pretty close. And sometimes when we think things are really close, they're really far away. And a lot of that has to do with our own biases as investors. One of the things that I would tell you is that people who hold on to stocks too long, it's because they're backward looking. And they're thinking, well, it's going to be a really long time before this plays out. So we want to really think about when we invest, what truly are the big trends? And those big trends will generally drive the financial performance of everything, almost everything. Government, central banks, there's always changes to the timeline. There's always favoritism from government. Special interests sometimes get things pushed through. So as long as we understand the big picture, the general direction that things are happening, we can manage our investments in more real time. And that makes it functionally an easier way to do things than constantly telling us stories, constantly hearing narratives and questioning the way things are going. We know that the direction of certain things isn't going to change. And yet, the trader narratives are out there depending on what happened that day or that week. We just need to keep our eye on the prize, which is the big picture. Where is the big money going and pushing everything? And so we'll talk a little bit about that today. We'll come back to it though. Let's go back to the article from 2 weeks ago. Talked about retirement income options for energy. If you go through this, what you find is that every single one of these has made money in the last 2 weeks. So if you sold the cash secured puts on any of these right now, you'd have made money. On a Metis, because that's up $1. This is up about $5. The Clean Energy Fund. XLE, which I told you looks like it's about to break out, is up. New Fortress Energy is up again. Permian Resources, who somebody said, when should we buy it? How low can it go? I said, just buy it and sell the cash secured puts. That's up 20%. Occidental Petroleum is up almost 15 or 16%. So when I tell you to do these things, it doesn't mean think about it for a while. I don't give you a lot of recommendations. So if I'm giving you a recommendation, it's pretty much, get on it. And when I talk about these companies ahead of time, 2 and 3 and 4 months ahead of time, I'm trying to give you the time you need to think about these companies and spend a little time on their websites and get to know them. I can't spoon feed everything to you because I just run out of time. If I point you in a direction, I talk about things today, you have to start learning them. We're going to talk about Cummins, I think it's Cummins later on today. The big idea that has something going for it down the road. And we don't want to invest in it today. Too high. Comes down here, we might. I did the same thing with all of these. Talked about all of these. And what was the theme behind Occidental Petroleum? What was the thing that's getting value from Buffett that the market doesn't really value? It's carbon capture. It's not the oil and gas. Oil and gas is the means to the end. What was the value in Permian Resources? Is that they bought a lot of great assets cheap out of bankruptcy when record numbers of companies were going bankrupt. What's the special thing with New Fortress Energy? It's the fast LNG. Only company out there to be able to capture gas and turn it into LNG at the wellhead of a rig in the ocean. Why XLE? It's mainly Chevron and Exxon and then the refiners and a couple service companies that make up 70% of this fund, about 12 companies. These are the surviving companies that came from all the bankruptcies that Permian Resources exploited. So now all of a sudden you have the survivors in XLE, and it looks like it's going to break out. Looks like it's happening right now. Metis, biofuels and carbon capture, major components of the Inflation Reduction Act. That's part of our 4-step process. Figure out where the government is steering things and giving money away. This company, based on the other takeovers that have taken place in the space, Metis, based on the other takeovers that have taken place in the space, in the industry, looks like it's going to increase in value 10 to 20 fold, maybe more. Then clean energy is benefiting from something that just happened, which is this is the first year that investment in decarbonization and clean energy is exceeding the amount of capital spending on oil and gas. And it's not because oil and gas spending really went down. It's because wind and solar, carbon capture, hydrogen have all been accelerating. And all of the new technologies, all of the new fuels, everything that's coming for oil and gas is economically better. Oh, and by the way, environmentally better too. But it's the economics that drive things. So we've gotten to the point where when oil and gas are at the current prices, give or take, it's cheaper to produce all the other alternatives that happen to be cleaner. Now, are oil and gas prices artificially high? I think so. As I've told you, I think that Saudi Arabia, Russia, and China are deliberately causing inflation because they want to disrupt the dollar, which would undermine American strength. I think they'll be able to do it for a little while, but as long as we don't get stupid and vote for isolationists and people that would give in to China and Russia and Saudi Arabia, we'll be fine. So keep that in mind. Probably the biggest decision you should be making at the ballot box is who is going to have a smarter policy for fighting back against Saudi Arabia, Russia, and China. If you think it's people who support President Trump, you're wrong, because his lack of actions and his poor policy largely got us into this position. If you take offense at that, you shouldn't be offended. You should just think it through. I'm telling you as the economic guy, as a guy who's gotten 20 plus years of macro mostly right. The current policies that President Biden is putting in place and has put in place the last 2 years are pretty solid. Could there be improvements? Sure. But the semiconductors, the energy, the other policies for giving us a chance to maintain our position, which our geography would probably always give us. But in the face of shorter term pressures from conspirators, again, China, Russia, Saudi Arabia, and Iran, and some of the other OPEC countries, we can push it off because we know that at some point we don't need the oil and the gas. I mean, we as a nation are very close to that anyway. It's our allies that are suffering. So we should be doing what we can to support Europe and the emerging markets that are suffering because it's good for us in the long term. It prevents them from jumping the fence and cozying up to China and Russia and Saudi Arabia. Interestingly, our financial industry gets into bed with our enemies all the time. Think that through. Do they do it only for the money? Or is it to be able to exert American influence? Why does our government allow that? Well, it's because if our money guys go over there and get invested, we can do things like saying, hey, if you don't do this, we're going to take this action against you. Where did we last see that? Biden administration told all the technological people who are American citizens, if you fall into this category or that category or that category, you don't stop working with China, we're going to take away your American citizenship. And hundreds, probably thousands, quit. One action in a week created a brain drain of American minds and technology away from China, brought it back home or over to our allies. The things that are going on in the world all start with the secular trends. So we need to be very aware using our process, our 4-step process of how it's all working. Not only do we need to know what the big secular trends are, fourth industrial revolution, decarbonization, and financial digitization are the 3 biggest. How does that affect us as investors? So PricewaterhouseCoopers, now just PwC, ranked the strength of the fourth industrial revolution sub-industries. Robotics, one of the safest, fastest growing places to invest. Blockchain, which I break out separately. Artificial intelligence and machine learning, something that we talked about years ago. Internet of Things, we've been talking about for years. VR, AR, 3D printing. Drones, interestingly, is the one that I've said I'm not so sure about. And here it is even though it's still got a pretty good rating, still on the far right versus these others. Again, this is for the safety and overall growth potential in these industries. And this is where hundreds of billions of dollars are going for development. And why is that happening? It's because the C-level executives say that it's the best way for them to run their businesses. 63% of C-level executives say that fourth industrial revolution spending provides protection against economic downturns. This is how they insulate their businesses. Makes you wonder about that other 37%, doesn't it? You really don't want to be invested in those companies. Blockchain, which is part of the financial digitization trend, includes Bitcoin, Ethereum, digital contracts, supply chain tracking, logistics, central bank digital currencies, and a lot more. Again, really part of the fourth industrial revolution. I break it out because I think that we think about money and commerce differently than we think about tech. Is that a fair statement? I think it probably is. And if I'm right, and Bitcoin develops a role in global commerce, in addition to just being a store of value for the wealthy, then we'll see a renewed focus on blockchain in the collective consciousness. And this crypto winter is going to turn into a crypto spring and then a summer. And what happens at the end of every summer? Everybody tries to get that last vacation in. FOMO, FOMO, FOMO. Folks, I'm telling you, if you haven't gone out and bought a little bit of Bitcoin with your excess bank savings yet, do it right now. Stop thinking about, well, could it get down to 12 or 14,000? Yeah, maybe. Who cares? Buy some now, buy some then. Go to my Coinbase link. So I make that $10 and then you get $10. Throw $1,000 into Bitcoin. Or if you're sitting on a huge pile of cash at the bank, throw 5 or 10% at Bitcoin. It's every bit as good of an investment as when you threw that money at gold. Bitcoin is digital gold. And it might become a functional currency in the emerging markets and the new axis of evil, China, Russia, and Saudi Arabia. And if that happens, you might see Bitcoin at $1 million. I'm not kidding about that. There's a finite amount of Bitcoin. And if it becomes really part of international commerce, even 10 or 20% of it, it goes skyrocketing. It goes skyrocketing at 1 or 2%, which I think is almost assured. Countries like El Salvador and several in Africa and Asia are already gearing up for it. You are seeing right now a great capitulation of retail investors on Bitcoin because that's what retail investors do. They get frustrated, they sell. Oh my God, it's down 50%. Can it go down another 50%? And the answer is yes, but Bitcoin's been chopping around in the same trading range for like 3 or 4 months. Every seller is being met with a bigger buyer. Otherwise, the price would have kept going down. Pretty simple logic. You have to think about everything that way. If something stops going down, especially for longer than 3 months, and it's chopping along, that means that there's some pretty consequential buyers in there soaking up all the supply they can as the little itty bitty guys trickle it in there because they panic. First, they panic because it went down. Then they continue to sell it as like, oh, it's dead money, dead money, dead money, dead money. I'm going to go chase that other thing. These are great formations that we're seeing in some of these beaten down stocks and in Bitcoin. And finally, decarbonization, capital investments, renewable energy versus oil and gas. Look what's happening. Investments in clean energy, renewable energy are going to exceed oil and gas this year. They're basically the same last year. And with legislation around the world supporting this, it's just going to keep going. To that point, in 2026 and 2027 that I keep pointing to, when oil and gas isn't such a big deal, you see the panic pumping, prices come down because they're afraid it's going to get stranded because of all this new competition. Hydrogen, fuel cells, solar, wind, EVs. Anybody who doubts that demand for oil is basically peaking in the next 2 or 3 years and then it's going to start falling is delusional. We are within a year or 2 or 3 of peak oil demand. Then it'll plateau for a couple of years. And then it's going to start to fall before 2030. I still think it's 2028 when oil demand finally ticks down. And that's without a recession. With a recession, it'll be worse. And they'll mitigate the collapse in oil because they're going to pump so much of it, it'll get cheap again later this decade. Meanwhile, all the clean energy will have been built out. Their capex will fall. It'll just be streams of revenue on top of streams of revenue, particularly for the companies that manage the energy. Software as a service for the energy industry. So I have 3 stocks that we're going to sell puts on. I haven't entered them into the article yet, but I'll tell you about them. I'll show you them on the screener. Scroll down. You have Block. Block is one that we'll be selling cash secured puts on. take a look at the article. Generac will be selling cash secured puts on, and Unity Software. Now, we've talked about a bunch of other ones. Last week, we talked about REITs, right? We talked about our satellite as a service companies. If you're not buying these, and this is the article that I'm putting out tomorrow, I mean, just know that I've been telling you to buy these for a long time. Finish buying your software, your satellite as a service stocks now. Finish buying your satellite as a service stocks over the next week or two. Buy some today, and then see what happens after the Fed meeting and buy some more. We're getting these all up to 2% positions, give or take. And so I'll have 8% into these 4 stocks. Again, why are we doing it? It's more than just the fact that they're putting satellites in the air and there's a use for them. Think about this. Why did the U.S. government a couple decades ago make the decision to privatize our space industry rather than keeping it all with NASA? Why is that? They've written about it. They've talked about it openly. Why isn't NASA handling this all themselves? Come on. Somebody give me the one paragraph that describes it. Because if the government does it and we need information, we need to do something through the defense and intelligence community, right? Then it's on the government. It's an act of war. But if Black Sky or Planet or Satellogic or Spire provide information that's just contractual between whoever is subscribing, right? That's private industry. Now, that's not to say that Russia still won't blow up a private satellite, but it's not an act of war. We have privatized the spy apparatus in this country because it's a degree of separation between the government and the companies. Oh, the company did that on our own. We didn't mean it. It wasn't us. Don't bomb us. Don't blow us up. Blow them up if you have to blow somebody up. If you don't understand that we use our private industry as part of our defense and intelligence capabilities, then you just don't understand. Because we've been doing it with banking, the oil and gas industry, the car industry. Private markets are powerful, not only in generating capital and wealth and efficiently keeping our standard of living high, but private industry gives the government a degree of separation if something goes wrong. It's kind of like when you watch a movie and they send the team into wherever they're sending them and says, if you fail or get captured or killed, the government will disavow this. We'll do it anyway. Well, these companies will do it anyway because they're making a lot of money. And what is the protection for these companies? What is the competitive moat, the durable competitive advantage, durable comparative advantage? There's 2 of them. One is the government's giving them contracts. They don't have to give anybody else contracts. They don't want to. And 2, the government can limit the number of satellites that go up in the air. So these are the companies which have form of joints of staff on them and chief of staff on them. I mean, Mnuchin is in one of these companies. Joint chiefs, got 2 joint chiefs, former joint chiefs are in these companies. So there's a barrier to entry to compete with these companies. And that's what you look for. You look for oligopolies. Monopolies where you can get them, but you know they'll get broke up. So you look for oligopolies, places where there's pricing power and barriers to competition. These companies have it. So how often do I pound the table? This is going to make my dog bark. How often do I pound the table? The satellite as a service stocks, they're all going to go up a lot. You could consider biotech as software as a service. Again, if you sold any of these puts, you're making money. You can consider biotech as 4th industrial revolution, I should say. If you've sold any of these puts, you're making money. The streaming stocks come in 2 groups, Netflix and everybody else. Netflix gets your retail investment, which is why you kind of have to be a trader to own it because it goes up and down a lot. And I'm not so sure if the long term is up or choppy. I think that Netflix will probably be in a wide trading range for a long time, unless they cut a deal with somebody else for a library that helps them control their capex. Paramount, Warner Brothers, and Comcast are the other group. 2 of the 3, Paramount and Comcast, pay pretty good dividends. And the 3 of them have very rich investors getting involved. Your value investor crowd, Warren Buffett, David Einhorn, Seth Klarman, and go right down the list. Just take a look at their top 10 holders. So these companies are dramatically undervalued, as far as I can tell, based on future cash flows, growth rates, and debts that are coming down. Shareholder yield, right? That's what you look for. I think Warner Brothers Discovery is kicking out a dividend and buying back shares probably in 2 to 3 years. They've reduced their debt $3 billion like overnight. Paramount and Comcast are already doing it. Again, Netflix, I'm not so sure they're the growth juggernaut anymore based on their numbers. And they do have to make some sort of M&A deal. We're not sure if they'll do the right one or not. But still, if you're willing to trade a little bit, Netflix is a pretty easy stock. Then, of course, if you sold puts on the emerging markets, those have bumped up and are starting to deteriorate. So we haven't given a bad cash secured put trade out of the last 20 or so that we've done. So the three that I'm talking about today, again, Block or Square, Generac, and Unity, they're going to be pretty good too. Now, you may already own some of the Unity, in which case you're just looking to bring your cost basis down somehow. You may or may not own Block, but if you do, you're probably close to even, to be my guess. If not, remember, you do have Block through the DAPP ETF that we use. So you have to decide how this is good for you. Does it fit your asset allocation based on what you're trying to do? I know a number of you have told me, and I think it's a great strategy, that you are using the ETFs to get overweights in the industries that are growing, but you're still mainly loading up on dividend stocks. And that's cool. That's what you want to do. I think it makes things easier for you. I think you get lower premiums on the puts you sell and fewer opportunities to sell covered calls because higher beta gives you more option action. But again, it depends on how much you want to manage. Because I think that we can grind out 10% pretty easy doing it conservatively. A lot of the things I talk about are designed to get you over 20%. You have to decide what's good for you. All right, let's just finish up with Cummins. What is the big theme that I'm talking about? Does anybody know? It's one word. What's the big theme with these guys? That's about 5 years away. Come on, hydrogen. Nailed it. So back at CES 2020, I came back and I told you that hydrogen, according to the executives and the engineers, is uniquely positioned for heavy transportation and energy storage. And then we talked to the CEO of Ametis almost 2 years later, and he says, look, the problem with EV semis, right, EV semi-trucks, is that the batteries are so big and heavy that they end up taking up some of the freight space. Well, those trucks only can deliver efficiently. They can maximize what they can put on the truck. So what you need is a way to maintain the amount of freight that a truck can carry and still get 700-800 miles in a day, until the drivers get to their technical limit on how much they should be driving in a day. And hydrogen is a way to do that. It is about twice as energy dense, a little bit more than twice as energy dense as oil and gas. So while you're starting to see a lot of diesel go away, mainly because of legislation that says it has to go away, starting in 2026 through 2035, diesel's going to almost go away. That's why shortages of diesel, they're not investing in it too much, because they know that 4 or 5 years from now, shortage of diesel goes away based on falling demand. A lot of trucks are switching to natural gas. That's not all that efficient either. It's half as dirty as diesel. It's actually less than half as dirty, and it's better for the engines and the maintenance. That's why a lot of buses have gone to it. But really what's coming is hydrogen fuel cells. We talked about the electrolyzers about 4 or 5 months ago that are getting produced so that we can turn water basically into hydrogen, and we'll run those electrolyzers on solar. So they'll be able to fuel a semi-truck with a hydrogen engine that's going to require less maintenance because it's less dirty, and it's basically going to get the equivalent of double the mileage, but really it's even better than that, because after a certain amount of miles, the hydrogen becomes almost free, right? You still have to pay for the initial cost. There's a crossover, right? There's a period where you're still paying for it, then all of a sudden it falls off. It's like your CapEx for your truck. And the energy grid and companies can use these hydrogen fuel cells to power their buildings and power the grid. It's just a matter of where does the initial energy come from, which will be mostly solar in the future. The solar will charge a battery, energy will be in there, and it just becomes a virtuous cycle with the hydrogen. Cummins has contracts starting in 5 years when they're done with their build out to provide the engines for those trucks. They're already in a deal with Daimler Chrysler, or whoever they're called now, with Stellantis, to do it for them. So you're going to have the Cummins engines and the Chryslers. And I would imagine that either Ford and GM, are they Daimler trucks? I'm sorry. I get the companies mixed up. Is Daimler Trucks separate from Stellantis? They are separate. Okay, so Stellantis is on one side and Daimler Trucks stayed Daimler Trucks. Okay. So anyway, Cummins has that contract, and it looks like they have 2 more contracts coming. We'll see what they do with Ford and GM. I believe GM has had a deal with Cummins in the past. I'd have to look that up. In any case, what's going to happen is there'll be a moment of doubt, right? This idea is not in the collective consciousness. There's some early investors in hydrogen, but because it's not what people are used to, because 80 to 90% of the people never do a bit of actual research, they don't get it yet. And these companies aren't big enough in a lot of cases. I mean, this company is, that a lot of the ETFs aren't invested. A lot of ETFs aren't investing in Cummins right now because of that divestiture of dirty stocks. One of the things that Barron's pointed out, which I said again a few months ago, is the line between dirty and clean is becoming blurred as a lot of the big oil and gas companies, and now Cummins, are getting into the cleaner things. So do you punish them as an investor for their past, or do you look at where they're going? I think with Cummins and Chevron and Occidental, probably should be looking forward. Exxon, I'm still on the fence with. I do think Engine Company 1 saved them, but I still think they have a little bit bigger hurdle than Chevron. But that is why that I'm in XLE now. A lot of this stuff has moved way faster than anybody expected, even me, and I'm a bull on the clean energy. Under the old management, I never thought Exxon would make the shift. Well, Engine Company 1 came in and a couple other active investors came in and they made them make the shift. Still a little late in the game, but now the government's got their back. How does the government have their back? The government says, hey, we're going to give tax incentives for carbon capture. Exxon suddenly does a carbon capture deal. And if the price of oil gets, below 70, we'll probably fill up the SPR with it. So the government's effectively put a price under, right? The government has effectively put a floor under the price of oil, which means it will have plenty of natural gas production as well, since so much of the gas is associated to oil production. So when you take a look at all these pieces moving, that's why I did the article on energy investments a while back. These companies are, in fact, in most cases, better than the other companies that you take a look at. A lot of work goes into picking these out. I've been invested on and off in Occidental since 1999. I know this company inside and out. And it really got me thinking when Buffett first sold out almost, and then he started buying back in. And when Buffett was buying, when Icahn was selling, my head is like, why is he doing it? It's not just the oil and gas. I know it's not just the oil and gas. It's the carbon capture, because that's the thing that makes Chevron and Occidental similar, is they're both leaders in carbon technologies, which is where the government is offering support. Comes back to the 4-step process: secular trends, government and central bank support, right? The industries and the company's financial fundamentals, and then technical trends. And the technical trends are basically trying to tell you when the public is running in one direction and the rich guys are running in the other. And those times when they're running in different directions, follow the rich guys. That's why a trend on the uptrend that retail is buying, that the rich guys are holding, because they almost always buy first, the rich guys. You just ride that. That's when the trend is your friend. And we're going to start getting that pretty much everything that I've covered the last 3 weeks. I don't know if the Fed is going to make any dovish noises this week. I don't think they are. I think they're looking to put the finishing touches on this bear market with some sort of capitulation. The inflation numbers haven't turned the right direction for them yet. I think they will use that to give you more opportunities to sell more puts on the things that we've covered the last 3 weeks. Now, if I'm wrong, hey, you already sold a batch. You just wait for the next mini correction if we are at the start of a bull market this year. I don't think we're going to start the new bull market until early next year. When I say early, I mean really early, like second week of January early. But I could also see the Fed becoming more dovish in December, in which case the new bull market could start right around Christmas. Could get a holly jolly Christmas. We'll see. But we're getting close. So look at these best ideas and find ways to get involved. I mean, Occidental, it's almost too late. I think Berkshire is going to announce their tender offer soon. The New Fortress, Permian, buy the dips. XLE, if you just want to own a fund, sell the puts. I like selling the puts, or go ahead and buy it if you can get it cheap enough. I think it's a little too high to buy right now. Maybe the Fed gives you another chance. So these ideas, right? There's not a new idea every week. Sometimes the ideas from a few weeks ago or a few months ago, you just get another chance, right? Like when you're on the playground as a kid and you get the redo. A lot of redos. Look for the redos if you missed it already. Just look for the redos. They come. They do. They come. They may not get all the way back to where they were, but they usually get around halfway back. So look at these. All right. Have a good day. I bought 2 of the bags of candy at Costco. We had hardly any trick-or-treaters in our neighborhood because our condo complex isn't good about that. Try to fix that for next year. So we have a lot of candy here. We're going to take a unopened bag of candy over to the assisted living community by my grandmother and make sure the staff knows there's a lot of caramel for the people who probably shouldn't eat caramel. But yeah, we're going to bring 150 plus pieces of candy to assisted living later today. And we'll see. I'm guessing the Twix and the Kit Kats. I bet the Kit Kats probably go fastest. It's not really sure what the 80 and 90-year-olds like for candy, but we're going to find out today. All right. Have a happy Halloween. I'm imagining most people have already done trick or treat this weekend, but if you haven't, give everybody an extra handful. All right. Take care.